coming in, but now we'll get you some important commentary from the Federal Reserve itself. Atlanta Fed President Raphael Bostic reiterated the central bank's commitment to rein in inflation. In an interview to CBS News, he said the Federal Reserve is going to do all it can to avoid deep pain. The Atlanta Fed president believes job losses could be smaller than what those seen in other situations. Bostic acknowledged the Fed's actions could result in job losses, but is optimistic about the economy's ability to absorb rate hikes. He also said that he sees positive momentum in the economy despite 2 consecutive quarters of negative GDP growth. All right, this takes us to the final update on our global market check. European markets also ended sharply lower on Friday, with the French CAC sliding almost 2.5%, the German DAX and the British FTSE closing about 2% lower. The British pound fell to record lows against the dollar on Friday after the UK government announced a radical economic plan to boost growth as the economy braces for recession. Announcing an extensive tax cut and investment incentive program, the newly appointed finance minister said UK was targeting a medium-term 2.5% trend rate in economic growth. The yield on the 2-year German government bond also hit a 14-year high following a lower Eurozone Purchasing Managers Index reading. Okay, all the global market action. Let's talk about how this will impact our own markets. We have our research team joining us bright and early this Monday morning to tell us what the trade setup looks like, the stocks that are likely to be in the news, and the action from the F&O space as well. Hey guys, a very good morning to all of you. Vivek is joining us first up to tell us the market setup today. Hey Vivek, good morning.
Well, good morning, Sonal. Now, Sonal, we are actually going into this Monday morning with a very weak global handover. It's a sea of red across most of the global market indices. Like you mentioned, the entire global markets, especially the Europe as well as US markets, have given a very weak handover. And this, in fact, is a weak handover for the 4th consecutive week running. Now, when you're talking about, how exactly our brokerage is looking, especially at the target as far as US markets are concerned, Goldman Sachs has been forced to cut its, year-end S&P 500 target. And they've cited the following worries, which they believe will impact, equity markets across most of the emerging markets as well as the developed markets. So rising rates, the hard landing of the Fed that has led to increasing interest rates, as well as recession fears, is something that has made them go quite bearish as far as equities are concerned. Now, when you're talking about currencies, the dollar strength continues. The euro per pound has actually gone to a 37-year low, and this is something that is, spooking the street, especially as far as the currency markets are concerned. Oil prices, still a bright spot as far as the Indian markets are concerned, have eased a little bit, and that remains the only bright spot in today's trading session. When you're talking about, today's morning trade, most of the Asian markets have opened quite sharply down. Most of the Asian markets are down anywhere between 1.8 to 2.2%. And in fact, the SGX Nifty is actually indicating a very sharp gap down as far as the Indian market is concerned, cut off almost 200 points versus Friday's Nifty futures close. So expect quite a sharp gap down opening as far as Indian markets are concerned.
Sharp cuts, yes, that's what expected for our own markets. Vivek, thanks a lot for that. And Vaishta is joining us now to list out the stocks that will be in focus today. Vaishta.
Hi Sonal, well, good morning. First is Anupam Rasayan, and this is with respect to the 12th September fire accident which took place in their plant in Sachin GIDC. The Gujarat Pollution Control Board have issued directions for the closure of the plant, and they have directed a payment of 1 crore as interim environmental compensation. Moving on to Infibeam Avenues, wherein the company consolidates its international business across 4 countries with its flagship brand CC Avenues. Moving on to Britannia, wherein the company elevates Mr. Varun Berry to Executive Vice Chairman and MD and appoints Rajneet Kohli as the ED and CEO. Moving on to Lakshmi Organic, wherein the plant, which is located in Mahad in Maharashtra, resumes its operations post the maintenance shutdown. For Ashoka Buildcon, the company's wholly owned subsidiary Viva Infrastructure Limited has acquired a 49% stake in Ashoka Highways Bhandara Limited from IDFC, and the last stock is Natco, wherein the company launches CTPR product Natgen in the Indian market.
Okay, all right. It will be a lot of market-specific news, but of course, these stocks will be in focus as well. And finally, let's get you up to speed with what's happening in the F&O space. Hey, Nigel, good morning.
Well, morning, Sonal. The bulls have lost their footing in the last few days, and today as well, as you were indicating, the SGX Nifty is indicating another big gap down. The problem has been the flows. The FI's last few trading sessions, well, that relationship that they had with the Indian markets has gone into some turbulence. So let's see whether or not that continues. But currently, they're going at a net sell number of 2,000 crores odd, which isn't great. And the DIs, they're chimping in only with around 3 to around 400 crores odd. And the problem is now for the month of September, you have the FIs that have turned net sellers after the big buy flows that we saw in the month of August, and the DIs as well. So institutions have been net sellers. What did the FIs do in the F&O market? They covered some longs, they added short positions, close to around 29,000 short contracts, and now they're net short on the markets yet again. Close to around 80% of their positions are on the short side. The bigger problem, though, is there is aggressive writing that they have been undertaking. And even in Friday's trade, they wrote close to around 2 calls for every 1 put. And it seems a couple of those strikes, 17,500, 17,400 call. Between them, there was 75 lakh shares of open interest built up, and there was aggressive writing that we saw at those levels. On the option side, well, they're buying both calls as well as puts. Now, keep in mind, the Nifty is now in sell on rise mode till we take out that 20 DMA decisively. That's the way I'll read it. And that comes in at around 17,700 odd mark. But in the near term, could we be bracing for a bit of a bounce? Remember, in the last 6 trading sessions odd, we have corrected 770 points. SGX Nifty is indicating another 150, 170 point gap down. So that will be nearly around 950 points correction. So maybe in the near term, we could be bracing for a bit of a bounce. The PCI, remember, that was at 1.2, 1.3. That's come down to around 0.75 odd. And we have seen at around 0.7, we see some bit of relief out there. So risk reward could favor the bulls at around the 17,100, 17,150 odd mark. So keep in mind that range. If you get stopped out, well, you'll get stopped out at around the 200 DMA, which should come up for you on the screen. Important technical levels up there. So SGX Nifty, if you get that gap down, maybe a 200-point cut, track the first star lows, risk reward could favor you, and a couple of stocks moving in and out of the F&O band. So keep an eye out on them as well. Back to you.
Okay, so looks like it could be and it will be a negative start for the bulls for sure. Nigel, Vaishta and Vivek, thank you so much for joining us and prepping us up for this crucial trading day ahead. Let's step into a break now. Up next, precision bearing cage manufacturer